Alright, welcome to this new video. In this video, we're going to talk about open, high, low, and close. First, we're going to discuss the framework and how you can use this to frame your own trades around and find your bias on an intraday and also a higher time frame basis. And after that, we'll dive into the charts to see some examples. So without further ado, let's dive in. When you're looking at the candle, it doesn't matter if it's a weekly, a monthly, a daily, a 4-hour, a 1-hour candle. It doesn't matter which type of candle you're looking at. Every candle has a open, a low, a high, and a close. Sometimes you have a candle where the open is the same as the low, so you don't have a wick, but the majority of the candles will have a low being formed before expanding higher. And on the charts, this looks like this. So you have the open, then we trade lower, study the low of the candle, and then we expand higher, study the high of the candle, and then we close. And the cool part is you can do this on every time frame. If you're expecting a bullish candle, your goal is to buy below the open of the candle. For example, if this is a daily candle, you want to buy below the midnight open. And this can also be framed as a power of three, or an AMD, an accumulation, manipulation, distribution. You have accumulation, you have a manipulation lower, saying the low of the candle, and then we have a distribution higher towards the high of the candle. And you can use this on the daily, on the weekly, you can use it on every time frame. Price is fractal. So for example, if this is a monthly candle, the first few days of the month can be an accumulation of the monthly candle. And then possibly around NFP, around the first week of the month, you will see the manipulation leg, and then the rest of the month will be an expansion leg. If this is a weekly candle, probably Monday is your accumulation, between Monday and Tuesday is your manipulation, and the rest of the week is going to be distribution. If it's your daily candle, this can be the Asian session, accumulation, London manipulates lower, and expanding higher during the rest of the day. It's a classic Judas swing. If this is a 4-hour candle, it can be the first hour or the first 30 minutes, manipulation, distribution. Vice versa, when you have a bearish candle, you want to sell above the open of the candle. So in a bearish candle, you have a open, a high of the candle, then a low and a close. And on the charts, it will look like this. You have the open, you have a manipulation leg higher, and then we distribute lower, say the low of the candle, and then you have your close. So it's on the monthly candle. So first few days, first week, then manipulation, and then distribution. On a weekly candle, it can be a Monday, then manipulation, distribution, daily, Asia, London, New York, 4-hour, the first few minutes, first hour, then manipulation, then lower. Currently, we're looking at the Euro-USD daily chart. We're going to look at how the open, high, low, close plays a role inside determining your drawn liquidity. If you're not sure how to determine your drawn liquidity, please make sure you watch the dedicated video about this and also watch the daily bias videos on this channel. If you're expecting a bearish weekly candle, you want to have an open on Monday, a high on Monday or Tuesday, and then as the manipulation move, and then distribution move lower, and the close. Vice versa, if you're expecting a bullish weekly candle, you want to have an open, a low, a high, and a close. And a nice indicator for this, if you're not sure where you are on the weekly candle, you can use power of 3, and you can play around with the time frames you want to have. It's a very nice indicator to have on your charts. So this example, if a Monday open, we open higher. Tuesday, we're setting a high, and you see price trades above this high, but then the body fails to displace above it. If you have seen daily bias videos, you know that could indicate a move lower. So we have an open, a high, and then we go lower. And on Thursday, we distribute lower, and on Friday, we have this weekly close. In this example, we are looking at the Euro-USD on the weekly, and we're going to determine how the monthly candle could look like. Also, the monthly candle, if you're expecting a bullish candle, it's a open, low, high, close, and vice versa. If you're expecting a bearish candle, it's open, high, low, close. So let's see what the first week does. It sets a low. Then the second week takes out that low and displaces higher. That could indicate higher prices. And the rest of the month is distribution. But most of you guys here are intraday traders, so you want to know how to use this on an intraday basis. And we're looking at the GU chart on a 1 hour, and we're going to do the same for the daily chart. And to look at the current weekly candle, we see we had a low on Monday. Then on Tuesday, we set another low, a open, low, high, close. And if you have the weekly candle in mind, we're probably going higher. So also for Wednesday, we expect an open, low, high, close because we're expecting a bullish daily candle. So let's use the indicator again. So this was on Tuesday. So let's see how the daily candle looks like on Wednesday. So we have the New York open. Then we are going into London. So open, a low, taking out this liquidity here. And then we have a high and a close. It's a small range there, but here you can see it was here on Tuesday, open, low, high, close. And also Wednesday, open, low, high, close. And with this in mind, you can frame your lower time frame entries around this. Because when you're on the lower time frame, for example here on the 15-minute, and you're expecting a open, low, high, close, you want to see around the midnight, you want to see price trading lower, set the low of the day. That's most time inside the kill zone, so in the London or in the New York kill zone. So we trade here back into this order block at the start of the London session. Then we displace higher, creating a fair value gap. So you can place a 15-minute entry from here. If you miss that and you see price displacing higher, you can use other concepts like OTE, or you can use the breaker, or you can use an order block to frame your trades around. So for example, this entry, you know you want to see an open, low, high, close. So that means your bias is higher. So you want to see an expansion into New York. So for example, to use some concepts taught earlier on this channel, you can use the OTE. For example here, the OTE entry, we have a fair value gap entry, we have an inversion fair value gap entry, and what is an inversion fair value gap overlapping with a fair value gap? It's a balanced price range entry right here. We have a order block entry. Why are these down close candles an order block? Because they trade into a fair value gap. So also order block. So all these confluences stack up to each other to take a trade right here. But the framework about the open, low, high, close teaches you how to look at it from a higher time frame standpoint. So they can take the trade somewhere around here. For example, you want to take it on a balanced price range, stop loss below the last swing low. You can target the next swing high for a 1 to 2, 1 to 3, or you can play the whole daily range for 1 to 5 or 1 to 8. But I would prefer the low hanging fruit, so that will be this swing high here, the London high, and your trade will be look like this. Thank you for watching this video. I hope you now understand the concept of open, high, low, and close, and how you can incorporate this with the things earlier taught inside this mentorship. If you enjoy this kind of videos, please like and subscribe, share with all your trading friends, and I'll see you in the next one.